Hey everyone, welcome back to Corporate Dakota, where we unpack the mysteries of the corporate world. And today we're diving deep into Johnson Controls International PLC's latest quarterly report. Get ready because we've got some interesting numbers and insights to share. Before we jump in, if you appreciate understanding what actually drives a company's performance, then make sure you are subscribed. And if you want to keep the conversation going and share your thoughts, join our Discord community, linked in the description below. Johnson Controls is giving us a peek under the hood for the last 3 months of 2025. This is a bit like getting a company's report card for that quarter. Let's start with the big picture, the income statement. This shows us how much money they are making and what it costs them. They reported net sales of $5.8 billion for the quarter. That is a solid jump from $5.4 billion in the same period last year. This 7% increase is quite encouraging. Their products and systems brought in $3.9 billion, up from $3.7 billion in the previous year. And their services division pulled in $1.9 billion, up from $1.7 billion. This growth across both areas is a good sign. Now, digging a bit deeper into profitability, we see their gross profit, which is what is left after they account for the cost of making their products and providing their services, came in at $2.1 billion. This is up from $1.9 billion last year. What is really interesting is that their gross profit as a percentage of sales actually improved a bit. It went from 35.5% to 35.8%. That small jump of 0.3% might not sound like much, but on billions of dollars in sales, it means they are keeping a slightly bigger slice of the pie. This suggests they are managing their costs well, or have been able to pass on any price increases to customers. Their selling general and administrative expenses, or SG&A, actually went down. They spent $1.2 billion on this compared to $1.4 billion in the prior year. This is a significant decrease of 13%. This big drop was largely due to some one-time events, including some insurance recoveries related to the water system settlement and a gain from selling a business. So while it looks like they are cutting costs, it is important to remember these specific reasons. They also reported restructuring and impairment costs of $87 million. This is up from $33 million in the prior year. This increase suggests they are undertaking more significant changes within the company, perhaps closing facilities or reorganizing operations. This is something to keep an eye on as it can impact future performance. Finally, their income tax provision was $152 million, leading to an effective tax rate of 21.4%. This is higher than their earlier rate of 11.5%. The company explained this increase is mainly due to the tax impact of insurance proceeds related to a water system settlement and taxes related to selling some of their businesses. Now let's look at the balance sheet. This is like a snapshot of what the company owns and what it owes at a specific point in time. As of the 31st of December 2025, their total assets stood at a massive $38 billion, which is pretty much flat compared to the 30th of September 2025. Their accounts receivable, which is money owed to them by customers, was $6.2 billion. This is a slight decrease from the previous quarter. Inventories increased to $1.9 billion from $1.8 billion. This could mean they are building up stock to meet anticipated demand, or perhaps some products are moving a bit slower. And then there is goodwill. This is an accounting concept that represents the value of a company over and above its identifiable assets, usually from past acquisitions. Johnson Controls has a huge amount of goodwill on its books at $16.6 billion. This number barely changed from the prior quarter. It tells us that the value of their past acquisitions is being maintained on their books. Shareholders' equity, which represents the owner's stake in the company, was about $13.2 billion. This includes capital in excess of par value, which is essentially the money investors paid for shares above their nominal face value. Moving on to the cash flow statement, this tells us where the company's cash is coming from and where it is going. For the 3 months ended the 31st of December 2025, they generated $611 million from operating activities. This is a significant improvement from the $249 million in the same period of the prior year. This is a very positive development as it shows they are generating more cash from their core business operations. On the investing side, they spent $80 million on capital expenditures, which are investments in property, plant, and equipment. This is less than the $116 million they spent in the prior year. Interestingly, they received $207 million from the divestiture of a business. This refers to the sale of their Ad Mexico security business, which they completed in October 2025. This influx of cash helped boost their investing activities for the quarter. In terms of financing, they had a net outflow of $464 million. This was mainly due to repayments of debt. Last year, they had a net inflow for financing of $201 million, which included significant proceeds from borrowings. Looking at shareholders' equity, the numbers show the impact of these activities. Beginning equity attributable to Johnson Controls was about $12.9 billion. They had a solid net income of $524 million attributable to them. However, they also paid out $246 million in dividends. Their treasury stock, which are shares the company repurchased, increased slightly to $1.35 billion. This means they bought back some of their own stock. Now let's touch on some of the important notes within the financial statements. These are where the company provides more detail and context for the numbers. They mention they realigned into 3 reportable segments in April 2025. These are Americas, AMEA, and APA. This is a strategic move to simplify how they report their business performance. Under revenue recognition, they disaggregate their revenue by segment and by products and services. For the 3 months ended the 31st of December 2025, their total revenue broken down by segment was $3.8 billion for the Americas, $1.3 billion for EMEA, and $693 million for APAC. It is good to see growth across all these regions. The notes also give us details on their goodwill and other intangible assets. Their goodwill remains stable at $16.6 billion, and their other intangible assets like technology and customer relationships amount to about $3.6 billion. This shows a significant portion of their assets are non-physical, reflecting the value of acquired businesses and intellectual property. Under restructuring and related costs, they outline a multi-year plan that began in the 4th quarter of fiscal 2024. This plan is expected to be completed in fiscal 2027 and involves about $400 million in one-time costs. The goal is to streamline operations and achieve annual cost savings of about $500 million. For the 3 months ended the 31st of December 2025, they incurred $37 million in restructuring costs. This section on commitments and contingencies is often where you find the really juicy stuff, the potential risks and liabilities. Johnson Controls has several significant environmental matters, particularly related to aqueous film forming foam or AFF, which contains PFAs. They have significant reserves set aside for remediation efforts. A major event was the settlement of a nationwide class of public water systems for $750 million. Tyco Fire Products, a subsidiary, made its final payment of $415 million in December 2024. While this resolves many claims, it is important to note that certain systems and claims were excluded, meaning future litigation is still possible. They also have ongoing asbestos-related liabilities. Their total asbestos liabilities are around $394 million, offset by asbestos-related assets and insurance receivables. This is a long-standing issue for many industrial companies. So, what is the big takeaway here? Johnson Controls is showing solid revenue growth and improved profitability, driven by disciplined execution. And importantly, strong demand in areas like data centers. The 7% net sales increase is a positive sign, and the improvement in gross profit margin is particularly noteworthy. However, we can't ignore the significant restructuring costs and the ongoing legal and environmental liabilities, especially concerning PFAs. While they seem to be managing these challenges, these are substantial risks that could impact future financial results. The large amount of goodwill also indicates a reliance on past acquisitions. And investors will want to see continued organic growth and successful integration of acquired businesses. The company appears to be strategically positioning itself for growth in sustainable and smart building technologies, which aligns with broader market trends. The significant increase in orders and backlog suggests this strategy is gaining traction. On the flip side, their reliance on debt is something to monitor, though their debt to capitalization ratios remain within a manageable range. Overall, Johnson Controls is a company in transition, navigating significant global economic factors and legacy liabilities while investing in future growth areas. The management team is actively addressing challenges, but the execution of their restructuring plans and the management of environmental and legal risks will be critical for continued success. Alright, that is our deep dive into Johnson Controls' latest quarterly report. What are your thoughts on these numbers and what they mean for the company's future? Drop your insights in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more corporate deep dives. And remember to join our Discord community linked in the description to continue the conversation. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.